Welcome back, everybody, to another deep dive. We love digging through these financial filings.
Absolutely.
And today, we've got a really interesting one. We're taking a look at Lotus Chocolate Company Ltd.
LCCL.
LCCL, you got it. We've got regulatory filings straight from the Bombay Stock Exchange.
Oh,
So
this is good stuff.
this is good stuff. We're going to be looking at their latest financial results and some of the board decisions that they've made recently.
I think what's really fascinating here is we're looking at a company that's at a really pivotal moment.
Yeah.
They've made some big moves, and we get to see how that's playing out in the numbers, but also kind of read between the lines a little bit.
Absolutely.
Yeah,
So let's jump right into it.
let's do it.
LCCL released their unaudited results for the quarter and 9 months ending December 31st, 2024.
Yeah, and right off the bat, the revenue growth is pretty incredible.
It's pretty amazing.
Mhm.
Over 300% growth in revenue from operations for the 9-month period compared to last year.
Yeah, but there's an asterisk there. There's a little something we got to pay attention to. These figures are unaudited.
Okay, so unaudited. What does that mean exactly for people who might not be familiar with that term?
Sure. So basically it means that the company's internal accounting team has prepared the financial statements, but an independent auditor hasn't fully reviewed and verified them yet.
So is that unusual?
Not necessarily. It's actually pretty common for companies to release unaudited results for a quarter or a 9-month period, but it's just something to keep in mind as we go through these numbers.
Okay, and it's particularly interesting in this case because, as you mentioned, LCCL recently underwent a merger with their subsidiary Sohaga Confectionery Private Limited,
This CPL,
right?
Yeah.
Could that be adding some wrinkles to the audit process?
potentially. Merging the financial records of two separate entities can definitely add complexity. It might be taking the auditors a little extra time to make sure everything's in order.
Okay, so we're working with unaudited numbers,
Yeah.
but even with that caveat, that revenue jump is pretty impressive.
Yeah, there's no denying that over 300% growth is nothing to sneeze at. Definitely suggests they're doing something right.
They're definitely hitting that sweet spot. But let's dig a little deeper because when we look at the quarter-specific numbers, it gets a bit more interesting,
A little more nuanced.
more nuanced.
Yeah.
Yeah. For the quarter, their expenses were actually higher than their total income.
Now, that might seem a little counterintuitive at first.
It does.
Yeah,
How can a company be profitable if they're spending more than they're bringing in?
that's where the fun of accounting comes in. If you look closely at the filings, you'll see it comes down to changes in their inventory valuation.
Changes in inventory valuation.
Okay.
Break that down for me.
So imagine this LCCL stocked up on cocoa beans, which is, their key ingredient
Makes sense.
when prices were really high. But recently, cocoa prices have dropped. So now, even though they bought those beans at a higher cost, their existing inventory is valued at a lower price.
Right.
And that can actually create a profit on paper.
So it's not that they've necessarily sold more chocolate. It's that the ingredients themselves are now worth less on their books.
Exactly. And that's an important thing to remember when you're looking at financial statements. Profitability can be influenced by a lot of different factors, not just sales volume.
It's not as straightforward as it always seems.
Definitely not.
Right.
But even with this interesting dynamic with expenses, LCCL still managed to deliver a pretty healthy earnings per share for the 9-month period.
Yeah, that was a good sign, I think, for a lot of people watching those numbers.
Absolutely. A strong EPS is something that investors really pay attention to because it gives them a sense of how much profit the company is generating for each share of stock.
So that kind of signals that LTCL could be a good investment opportunity.
It's certainly a positive indicator. Now, before we move on too far, let's go back to that amalgamation with Sohaga Confectionery Private Limited for a minute.
SCPL.
Yeah.
Yeah, it seems like this merger is going to be a recurring theme as we go through these filings.
It's more than just a footnote. This amalgamation officially took effect on May 25th, 2023, which means we're basically looking at a new combined entity now. So when we see those big year-over-year comparisons, we got to keep in mind that we're comparing apples to oranges to some extent.
So those big revenue numbers we were talking about are even more impressive considering that this is essentially a brand new company.
It's a very different picture than what we were looking at a year ago.
Yeah. And on top of that, they've also made some changes to their leadership team.
Right. They've appointed 2 new additional directors to their board, Abhijit Pai and Aditya Pai.
And what stood out to me is that both of these new additions are part of the company's promoter group.
So there's a possibility of some family ties to the business there.
Yeah. It seems like we might be seeing a new generation stepping into leadership roles.
Potentially. What I find really interesting, though, are their backgrounds.
Yeah. They're both very accomplished in their own right.
Apiji Pai, for example, has a strong focus on infrastructure. He's currently the president of the Puzzolana Group.
Which is a major player in infrastructure and mining equipment.
Right. And he's also co-founder of Gruhas,
Gruhas.
an investment firm focused on things like cutting-edge technology, the built world AI energy transition.
Wow.
So very forward-thinking individual.
Yeah. And then you have Aditya Pai, who has a background in engineering business management from the University of Warwick.
Which is a great school.
That seems like a really interesting combination of skills, engineering, and business.
Right. It suggests that he has a good understanding of how to take engineering innovations and turn them into successful businesses.
So with all this in mind, the question becomes, why bring these two individuals with their specific expertise onto the board at this particular time?
Yeah. What's the strategic vision here? What are they bringing to LCCL?
It almost feels like they've been handpicked to kind of usher LCCL into this new era of growth.
That's a very plausible interpretation. Board appointments are rarely random. They usually reflect a company's long-term goals and their plans for the future.
And speaking of plans for the future, LCCL has made another big move recently. They've decided to increase the company's borrowing limit.
To a pretty substantial amount.
Ours 500 crore, roughly US $61 million.
Wow. That's a lot of borrowing power.
So what's the logic behind that? Why would they need to borrow so much money?
Well, I think it ties back to everything we've been talking about. We're looking at a company with surging revenue, a recent restructuring through amalgamation,
Right.
and now a new leadership team with diverse expertise. Increasing their borrowing capacity could be a strategic move to fuel further growth. But the question is, what kind of growth are they aiming for?
Are they gearing up for a shopping spree, acquiring other confectionery companies to expand their portfolio?
That's one possibility.
Or are they thinking about some major capital investments, building new state-of-the-art facilities, investing heavily in R&D?
Those are all valid scenarios.
Yeah.
And the increased borrowing limit would definitely give them the financial resources to make some bold moves.
But there's a catch, right? This isn't a done deal yet.
Right. It still needs shareholder approval.
Which adds another layer of complexity to this story.
Absolutely. Will the shareholders be on board with this plan? That's the big question.
So we've got this kind of puzzle unfolding here. We've got this ambitious borrowing limit increase, a fresh leadership team, and a recent amalgamation that's fundamentally reshaped LCCL.
Yeah.
It makes you wonder what they're going to do with all this potential.
That's the exciting part. It's like we get to look at the pieces they've put in place and speculate about the bigger picture they're aiming for.
So let's play that game a bit. When we come back, we'll explore some of the potential scenarios for LCCL and what this could all mean for their future. So we left off talk about this big borrowing limit increase and what LCCL might do with all that financial firepower.
Right. A lot of possibilities on the table.
So let's assume for a second that the shareholders give them the green light. What are some of the most likely scenarios here?
Well, one that jumps out at me is growth through acquisitions.
Acquisitions. So they've already absorbed one subsidiary.
Right.
Could they be looking to bring even more companies under the LCCL umbrella?
It wouldn't be surprising. We've seen this strategy play out time and time again in the business world. Companies use acquisitions to expand their market share.
Diversify their offerings.
Exactly.
So in LCCL's case, are we talking about maybe acquiring smaller players in the Indian market, kind of solidifying their position there?
Could be. Or they might set their sights on international expansion.
Going global.
It's possible.
Huh.
They could be looking for companies that complement their existing product line. Maybe a premium chocolate brand to appeal to a more high-end customer.
Oh, interesting.
Or a company specializing in sugar-free treats to tap into that growing health-conscious market.
So acquisitions could be a way to quickly grow their business and offer a wider range of products to different consumer segments.
Exactly. But of course, acquisitions come with their own set of challenges.
Right. It's not always a smooth process.
Not at all. There's always the risk of cultural clashes, integration issues, overpaying for a company that doesn't quite live up to expectations.
So LCCL would need to be very strategic and thoughtful about their acquisition targets if they go down that road.
Absolutely. They'd need to make sure that any company they acquire is a good fit both strategically and culturally. And they'd need to have a solid plan for integrating that company into the LCCL fold.
It makes you wonder if those new board members with their diverse backgrounds might have a role to play in this potential acquisition strategy.
It's very possible Abhijit Pai's experience with mergers and acquisitions at the Puzzolana Group could be invaluable here.
Right. And Aditya Pai's understanding of how to translate innovation into profitable ventures could also be a key asset.
They could bring a fresh perspective to LCCL's approach to acquisitions.
So we've talked about acquisitions, But let's not forget about the possibility of major capital investments. Could that be another reason for this big borrowing limit increase?
Absolutely. They might be looking to upgrade their manufacturing capabilities, invest in new technology.
Automation, maybe?
Could be. They might want to streamline their production process, make it more efficient.
Or maybe they're planning to expand their existing facilities or even build brand new ones.
Right, to increase their production capacity, meet that growing demand we were talking about earlier.
It also makes you think about their long-term vision. Are they content with being a major player in the Indian market?
Or do they have global ambitions?
Do they want to become a household name worldwide?
It's a question worth considering, and if they are thinking about going global, they'll need to invest in marketing and branding to build that international recognition.
So many possibilities. It's like we're looking through a crystal ball, trying to see what the future holds for LCCL.
In a way we are. We're working with limited information, but we can use these clues, these filings, these board decisions to piece together a narrative.
That's like we're financial detectives.
I like that.
So speaking of clues, let's go back to that amalgamation with Sohagya Confectionery Private Limited for a minute.
SCPL.
We know it's having a big impact on their financials, but what else can we learn from this merger?
Well, from a purely financial standpoint, the amalgamation probably resulted in some cost savings.
Consolidating operations, streamlining things.
Exactly. And it also simplifies their corporate structure, which can make decision-making a lot more agile.
Less bureaucracy.
Right. But I think it goes beyond just the numbers. This merger suggests a strategic shift towards consolidating their position in the market.
So by absorbing their subsidiary, they're eliminating any potential internal competition.
Right, creating a more unified brand presence.
Which can be really powerful in a competitive industry like confectionery.
Absolutely. It allows them to leverage their combined resources, more effectively streamline their marketing efforts.
Makes those impressive revenue figures we talked about even more noteworthy.
Definitely. We're not just seeing organic growth here. We're seeing the combined force of two entities operating as a single, more powerful unit.
And that brings us back to those new board members, Abhijit and Aditya Pai.
Their arrival at this pivotal moment for LCCL is really interesting.
It's like they're coming in at just the right time to help steer the company in this new direction.
Their background suggests they're not just there to maintain the status quo. They're there to shake things up, bring a fresh perspective.
It's like LCCL is assembling a dream team, each member bringing their own unique skills and insights to the table.
It's a great example of how successful companies operate. It's not just about having a great product or a strong financial foundation. It's also about having the right leadership in place.
The right people to guide the company through challenges and capitalize on opportunities.
Exactly. It's like a recipe for success. You need the right ingredients, the right equipment, and a skilled chef to bring it all together.
And in LCCL's case, they seem to have all the ingredients in place.
The ingredients, the equipment, and now with the new leadership team, the skilled chefs to orchestrate their next big move.
But as with any recipe, the proof is in the pudding, or should I say the chocolate.
Well said. Only time will tell if LCCL can truly transform their ambitions into tangible results.
It's an exciting story that's still unfolding,
Yeah.
and we're going to be watching closely to see what they do next.
Now, before we wrap up, I think it's important to take a step back and think about what all of this means for our listeners.
Yeah, we've been dissecting LCCL's corporate maneuvers, but how can people apply this knowledge to their own understanding of the business world?
That's a great question and something we'll explore in more detail when we come back.
So we've spent this deep dive really getting into the nuts and bolts of LCCL.
Yeah, we've covered a lot of ground.
Impressive financials, the recent merger, new leadership, that borrowing limit increase. I mean,
It's been a whirlwind.
it has been, but now I think it's time to kind of zoom out a little bit and think about what this all means for our listeners.
Right. We've analyzed LCCL's moves, but how can people apply this knowledge to their own understanding of the business world?
Exactly. Because at the end of the day, that's what we're all about here, right? Giving people the tools to become more informed investors and business enthusiasts.
Absolutely. So I think LCCL's story is a really great case study in strategic decision-making.
Okay, how so?
Well, we've seen how they've used a merger to consolidate their position, brought in new leaders with very specific skills, and then really set themselves up for growth by boosting their borrowing power.
It's like we're watching a masterclass in corporate strategy unfold right in front of us.
Exactly. And by understanding the thought process behind these decisions, I think listeners can start to develop a more sophisticated view of how companies operate.
So let's say you're following a different company, maybe one in a completely different industry. What are some key takeaways from LCCL's approach that you could apply to your analysis?
Well, first off, I'd say pay close attention to leadership changes.
Okay.
New board members, especially those with specific expertise, often signal a shared in strategy.
So you got to look beyond just the names and titles.
Right, dig into their backgrounds, their experience, and see if you can connect those dots to the company's bigger goals.
It's like you're a detective looking for clues.
Exactly.
Yeah.
And don't just focus on the big headlines. Dig into the details of those financial reports, press releases, regulatory filings. Look for subtle changes in language, anything that might give you a glimpse into the company's thinking.
So it's really about going beyond the surface level.
Absolutely. And when you're analyzing financial performance, don't just get fixated on revenue growth.
Right.
Look deeper into what's driving profitability, the impact of mergers and acquisitions, any unique accounting treatments that might be skewing the numbers.
Like with LCCL and their inventory valuation.
Exactly. And that gave us a much clearer picture of their true profitability.
And one last thing to remember, right?
Yeah.
No company operates in a vacuum.
Right.
You got to consider the broader industry landscape, the competitive dynamics, macroeconomic factors that might be influencing their decisions. So it's about connecting all those dots, seeing the forest for the trees.
Exactly. Understanding that every corporate action, every financial decision tells a story.
And by learning to read those stories, you become a more informed observer of the business world.
Capable of anticipating trends, understanding strategic decisions.
Maybe even spotting investment opportunities.
Exactly. So with that in mind, let's wrap up this deep dive with the final thought for our listeners.
Okay, I like it.
We've explored LCCL's journey, analyzed their strategy, speculated about their future, but the most important question remains.
What's that?
What will their next big move be?
Ooh, good question. Will they go on an acquisition spree?
Snapping up competitors?
Will they pour money into cutting-edge tech infrastructure, become a manufacturing powerhouse? Or will they pull a complete surprise?
We've given you the tools to start forming your own hypotheses.
So pay attention to their announcements, analyze their decisions, and see if you can predict what LCCL will do next.
It's a challenge we leave you with, and we can't wait to see what happens.
This has been another fascinating deep dive into the world of business and finance.
We hope you enjoyed it.
And as always, we encourage you to stay curious, stay informed.
And keep exploring.
We'll see you next time.